folks, and thanks for joining me on my market report. My name is Mike, and this market report is on mortgage rates. We kind of like to get into the nitty-gritty of what impacts mortgage rates on a daily basis, uh, information that you may or may not know. Uh, Mortgage rates are based on mortgage-backed securities, which are bonds that are traded, packaged, and sold on Wall Street. So this is why we have some volatility in the rates, and why we see rates change on a can change on a daily basis. We could get several price changes in one single day. Most people don't realize that. So this is our way of bringing that out to you to kind of give you a guide as to what's going on behind the scenes and what's kind of give you an idea as to where the direction of rates, if they're going upwards or downwards, or kind of just going on a sideways pattern. If you guys are in the market to look to buy or refinance, or got questions about mortgage processes, a little bit about myself as I'm a loan officer. I'm here to help you guys out. If you guys need help with any of those or have questions about those, we're here to assist you. So please feel free to reach out anytime. In the meantime, we'll just jump right into this report. We'll start off with the economic data being reported today. We got the big numbers today. I'll jump right into it after this, which will be the second one here. But the average earnings month over month in July was increased. So previous it grew back in December. Initially said 0.3%, but it was increased to 0.4%. Forecast for July was 0.3%, and it grew by 0.4%. So both June and July were both much higher than they expected at 0.4%. So good news right there. People are making more money. Now the big one, we had the non-farm payrolls for the month of July. This was given to us by the Bureau of Labor Statistics. So the initial report for June came out at 850,000 jobs. However, it was revised higher to 938,000. Now forecasts have been saying in the high eights, so 870,000 in this situation. It came in much higher at 943,000. Now very good numbers here. I personally thought it was going to come in a lot higher, primarily because initial jobless claims in the month of July were increased. It went from 300,000 to 400,000. But I believe what most likely occurred is that the jobs, a lot of the benefits ran out, so people that were on those benefits went ahead and jumped into the job market. So I think you saw more people jump in there. I thought you would see more of that spike in August versus July, but I think maybe some people jumped ahead and got ahead into it. So that was good news. Uh, I mean, I was wrong, which is good. I mean, it's fine, but good news for the overall in the economy. Unemployment rate went from 5.9% in June, forecast gone 5.7, and it dropped out on to 5.4%. So we dropped a half a percent right there, which is obviously very good news right there. We still got some room to grow, so September we could see some more spikes. We got some states that are still giving out those extra benefits, so at some point we're going to probably, once those run out, we'll probably see more people, another big spike to the job markets here. Average work week per hours, we went from 34.7 hours per week in June. We got increased by 0.1% to remaining basically same thing at 34.7. This year I was going to say at 34.8. So not much change there. Wholesale inventories went from increase of 0.8% in May. Forecast is supposed to continue that trend at 0.8, and actually exceeded that 1.1%. So wholesalers are kind of gaining a little bit more inventories to stock up as well. So overall, very good numbers what we're seeing in the economic data today. So for the most part, stocks are up. However, Nasdaq is down a little bit. So we're seeing a bit of a pullback on the Nasdaq side today. Now, they obviously now the big thing about it will be is jobs data going forward. This will be obviously really important. We got two good reports that came out, primarily because June was revised 88,000 higher, and then we got September. The Fed has talked about wanting a full employment, and well, we're getting some really good data. So that tapering talk could happen much sooner than we expected. Investors at some point will probably be looking at that, and with that in mind, as such, mortgage-backed securities are down 23 basis points. So the taper talk, if you're not familiar with it, is that the Fed is buying $120 billion worth of treasuries and mortgage-backed securities. This is kind of helping create some liquidity in the markets, also helping boost up mortgage-backed securities as a result. It's creating more demand, so therefore propping up lower mortgage rates. Uh, with them pulling back, we're going to have less demand, and then of course, rates will start creeping back up. So today we're going to see we're touched off the 25-day moving average. As we'll see, is the rates did worsen a little bit today by almost a quarter of a point here. So about eighth to maybe, depending on the pricing, maybe about as much as of an eighth of a percent to the rate. Treasuries are shooting right up, also touching out the 25-day moving average and the new tech at technical level right about the 130 range. We're just sitting at 1.29 right now. So this is something we'll have to keep an eye on, see if this will continue its trend upwards. All right, so again, good news for jobs, not so good news for mortgage rates today. Um, so this is something we'll keep our eyes on. But again, we got the Fed's just not going to make a rash decision over this one report. They're going to want to see once school goes back and see what kind of norm we get back and see how much of an impact the Delta variant will have on the economy as well before they make a decision. So again, most likely we won't really hear any tapering talk till closer to November at the earliest on this. All right, folks. Hope this answers your questions. But yeah, I would be cautious, and hopefully these hold. If these hold, we'll be in a much better position. Um, but again, we could break through again and worsen. So we'll have to kind of keep our eyes and ears open. But again, if you guys got questions, anything we can help you guys out with, please reach out. If you guys like these videos, please smash that like button. We certainly great appreciate it. And you guys have a great weekend, and we'll catch you guys on Monday. Thanks for watching. Bye-bye.